Good morning, ladies with gentle hands. It is December 20th, 2023, 8:46 a.m., and we are back for another Market Open. Hello, everyone. It is a very interesting morning. To be honest, we got a lot to cover. We've got a lot to cover on today's morning. Number one, we're going to be talking about this oil crisis, okay? I have spent the past, call it about 3 hours this morning because I woke up early to go to the gym. Did I mention that I woke up early to go to the gym? Just around 5 a.m. Did I mention at 5 a.m. go to the gym? Just wanted to let you guys know I woke up early to go to the gym. And while I was at the gym, I was reading the Wall Street Journal, listening to some videos, trying to understand what's going on with the Houthis and the oil and the Red Sea. And I've condensed it into a lot of information. I'm going to give a comprehensive breakdown. And honestly, oil prices today are up 6% in the past 5 days. Brent oil hitting about $80 a barrel. We haven't seen $80 a barrel really in the past couple of weeks. That's not good. And it's happening for the wrong reasons. And as a result of that, there are massive inflation implications because of that. And we are going to be talking about it. It's not just something where it's like, oh, there's some, stuff going on in the Red Sea. It's like, no. When you guys hear some of the stats on the money that these, I guess, toll booths are causing or are charging for some of these ships, it is going to have an impact on consumers if this doesn't stop. And it doesn't look like it's stopping anytime soon. Number two, Robinhood is up 2%. In the pre-markets, $13.40. Robinhood is doing what Robinhood has got to do. So we're going to be talking about Robinhood and why Robinhood is getting a little bit of momentum right now in the pre-markets. And then finally, we've also got some news. We got some macro stuff about Bitcoin, got some new S&P 500 targets by Yardeni Research. And Palantir, one of their main partners, Accenture, is their consulting firm partners, is putting up some ridiculous numbers for earnings. And I think that is a proxy to what Palantir could potentially put up and in general, what generative AI companies are going to be able to put up in the next couple of quarters. So we've got a lot to talk about. Let's get into it. Also, I have a very special announcement. So let me read out all the names as we get into the morning open, and I will get into my special announcement. Casey, Ken, Richard, Petros, Mario, Julio, Andy, thank you all for being here. Somesh, Bayray. Bayray says, Amit, it would be great if you didn't show up this morning. Well, you're here for a reason, my good friend. Michael Wilder, Richard, Charles, Sethi Roth. You guys said I was late by a minute. Did I mention I was at the gym? So that's probably why I got a little late. I was too busy, carrying the entire gym on my back just because, I was doing what I had to do. I was lifting weights, 25 pounds. It's tough. Edmund, Kevin, Alex, did you go to the gym? Yes, I did go to the gym. Thank you for asking. I hope you guys know. Kelly, OMG, hi. OMG, hello, Kelly. Kevin Benjamins, Bryant Robinson, KIM, Nolan, Sam Chan, Robert, Inbound, Jeremy Black, Cactus Jelly, Cash King, Carter, Deli, Brian, Dan, Daryl, Simon, Kevin, Garcia. Let's get into the market open. So before we begin, first of all, I just want to let you guys remember that I have a special announcement. And before we begin, I want to tell you the special announcement. The special announcement is that I went to the gym this morning. No, I'm just kidding. But I just want you guys to know that I went to the gym this morning. All right. Really, honestly, I do have a little special announcement. I woke up this morning to go to the gym, obviously, as you guys know. But I also checked my phone. And when I checked my phone this morning and I woke up, Origin, good morning from the Netherlands. Thank you for being here. That is awesome. Thank you for being here. I got a notification on Twitter or X, and someone followed me. And it made me a little emotional, okay, when I saw this person follow me, because it really meant a lot. This is one of the, I usually don't talk about like follower counts or numbers. I never, bring up when I hit a milestone when it comes to follower count. Cause to me, I'm just like heads down. Let's keep working. We don't need to celebrate 20,000 or anything. Like just keep going, keep working. But this one got to me. This one made me feel a certain type of way. And you can see the time on the screenshot says 4:31 because I woke up early to go to the gym. So this is not like that. Actually, I did wake up early. Mr. Vlad Tenev, the CEO and co-founder of Robinhood, followed me this morning. And, it meant a lot to me, not to make a super big deal out of it, because I just got to thinking, I was like, 2019, this guy's app, the product that he came up with in 2013, worked his fucking ass off to build, to get it to become a real thing. It is quite literally 99% of the reasons why I'm into the stock market. Like maybe I would have discovered the stock market later and gotten into it. But until you buy that first share of a company, until you see yourself losing money on some random stock or making money because the stock went up and you're like, oh my goodness, I bought it at $3. Now it's at $3.40. You don't really know what it feels like to be an investor. And so his product is what I was using in 2019 in business classes where I was just on my computer, buying random stocks with like a couple $100. And today he follows me. So that meant a lot. So thank you, Mr. Vlad Tennant, for following me. If you're watching, you're probably not because you're busy running a very big company that is doing pretty well that we're going to talk about today. But just wanted to give a shout out to Vlad for following me on Twitter. And hopefully he enjoys some of the tweets that might show up in his feed. All right, that was the big announcement. Not a crazy announcement, but it meant a lot to me. Let's get into oil. We have got a lot to talk about oil right now because this is a pretty big deal. This is a pretty big deal. And I think we need to discuss it more in depth. I think a lot of people don't really know what's going on with oil, quite frankly, because it's a lot of information to condense. So let's actually discuss it. Now, I'm going to do two things. One, I'm going to give a simple breakdown of what's going on with oil. And then we're going to watch a video. This video actually is really going to put into perspective that this is not like a joke. And even if it doesn't continue to escalate, there are implications already, given oil is up 6% in the past couple of days, right now $80 a barrel. And if it does continue to escalate and oil gets to 90, the reason this matters, big story, long story short, just the TLDR, is right now the Fed has 3 interest rate cuts coming in 2024. 67% of analysts are saying that the first one's happening in March. I don't think it's happening in March, and it's definitely not happening in March if oil gets to $90, because we will have that black swan event that we think we didn't have for inflation if oil gets to 90 because of what's going on right now in the Red Sea. Now, to help me do this little comprehensive breakdown, it's going to be about 2-3 minutes, and we'll watch this video. I actually used Bard. I mean, this is the first time I used Bard for like a real thing because I really wanted like a little bit of a breakdown that I could present in a meaningful way. And Bard did a great job. They updated it as of December 20th. I'm getting real-time info. This is the first time I'm like, wait a second, this is way better than ChatGPT, because ChatGPT using Bing and trying to, this is actually elite. So for those that are a little bearish Bard, I would suggest using it for like real-time updates, and you might get some progress from it. All right, so what is the source of tension? Right now, the Houthi rebels in Yemen are carrying out attacks on commercial ships in the Red Sea. Why are they doing this? What is the reason this is happening? The Houthi rebels are backed by Iran. Iran doesn't like what Israel is doing to Palestine. As a result, they have these Houthi rebels that are, in many ways clarified as terrorist groups that are backed by Iran. They're funding them, giving them the weapons, etc. If commercial ships are coming into the Red Sea, these Houthi rebels are there with guns, missiles, bombs, ready to attack these ships. That's not a good thing. These acts also involve drones, missiles, and attempted boardings, taking over the ship. Now, what is the impact of this? Essentially, in layman terms, it is a disruption of maritime trade. Some shipping companies like Maersk and MSC have halted or rerouted traffic. Some vessels are taking the longer Cape of Good Hope route instead of the Suez Canal. The Panama Canal is also screwed up, and global supply chains are being affected, potentially leading to higher costs and delays. The geopolitical concerns are that the escalation of this tension between Iran leads to more escalation between Israel and the United States. Given the United States is supporting Israel, the United States has sent our ships out to try to see what we can do. And this is going to be an increased risk of wider conflict in the region. As of December 20th, today, we have several new incidents that just happened. The U.S. is announcing a maritime coalition to defend shipping in the area, and we have an uncertain future on what's going on. Here's a video that I think encapsulates really the core problem around what's going on in the Red Sea and why this is actually something every investor right now, given we're sitting on a lot of gains, we cannot ignore. I don't think this is a necessarily sell, stocks event, but it is something to take into account just to figure out how to position your portfolio going into 2024. So let's get an update on this. We'll pause it in between and we'll keep going from there. Some stats that I heard in this video today, I mean, it blew my mind, and it's why oil is up 6% on the day.
Up a series of attacks on ships prompted many to reroute their shipments. Only problem is that new route takes longer and costs a lot more. Maersk CEO Vincent Clark joined Money Movers today to talk about the impact.
It's anywhere from 2 to 4 weeks of delay in transit. It's a 7,300 kilometers or about detour, so it takes a while to actually perform it.
$35 billion in cargo has been diverted amid fear of attacks. Now, one real quick before we continue to the video. The way we get products and services, like we need supply chains, right? So companies, we don't think about this because we're so privileged in the world we're living in, where we could, just order something from Amazon and it comes in a couple of days. But that product has to be made and shipped to Amazon. And there is an incredibly intricate and complex supply chain that is global to be able to get a simple product that might cost $5 to get to your house in 2 days. And that is what's being diverted right now, given what's going on with the Houthi rebels. Maersk is one of the largest shipping companies, and their stock has actually started to go higher in the past couple of days, up 12% in the past 8 days because of everything that's going on.
Now, so far, about $35 billion in cargo has already been diverted from the Red Sea, and that number expected, obviously, to go up. More about the situation tonight It's CNBC's global logistics reporter, Lorianne LaRocco, has been doing great work on this. And, you know, I'm a geek for this stuff as well, Lorianne. So it's been a long day. Thanks for coming back in.
Sure.
These numbers, just to get through the Suez, is expensive. It's also expensive to go around the Cape of Africa. Who's making money here?
The ocean carriers are going to make the money.
They're going to make money, not lose money.
They're going to absolutely make money off of this, and here's why. So to traverse over through the Suez Canal, it costs between $500,000 to $600,000 per container ship.
Wait, that's the toll?
That's
$600,000. I'm not going to complain about the Holland Tunnel ever again.
Nope, don't do it.
Okay, so two things. Number one, that was a phenomenal joke for those that are in the tri-state area, New York, New Jersey, Philadelphia. That was one of the best jokes I've heard, honestly, in the past week. A very good joke on that part. Number two, $600,000 to pass through the Suez Canal. And that price is only getting bigger and bigger because now it's like, well, if you can't go through there, you can't go through there, you got to go through here. We're raising the price. Who do you think's paying for that $600,000? It's not just the shipping companies. It's not just the companies that are, or the countries that are importing those goods. It's us, the consumer, that's going to have to pay more per unit of whatever thing we're buying that's implicated by these supply chains.
Do it. But yeah, no, so they're saving on that. And so I got tonight, MSC is now going to charge $4,000 per 40-foot container. Okay. From India to the United States. Right now, it's about $2,000. So you're looking at a 30 to 40% markup starting in January.
So they're not going to pay the Suez toll.
Correct.
And they're going to just pass on the higher charges to their customer to go that extra, the 3 weeks to go around Africa.
Exactly. And I've had a lot of like logistics CEOs call me tonight. They're furious.
Because they're going to have to eat these higher costs.
Exactly. And it's reminiscent of what they paid during COVID.
Really?
Well, that's what they're...
So that's what I wanted to show. Now, what she says at the end, I think is very important. This is reminiscent of what happened during the pandemic. What happened during the pandemic? Everything shut down. So we had massive supply chain bottlenecks, which is, if you want to buy a new pair of Beats headphones for $300, but all the raw goods and commodities that are required to make those simple headphones that for you to pay for, it might not only be delayed, but it might cost more because the raw goods to be able to create it just is up more. And what is the government going to do? They're going to, send stimulus checks to your house. No, we're not doing that anymore. We cannot print any more money from that respect. So if this crisis continues to get higher and higher, and as of now, I don't know if it lasts going into the new year, but it definitely doesn't look like it's stopping tomorrow. It is something to think about in regards to inflation. Now, does it have the biggest concern for what we're seeing, given inflation is falling off a cliff, and we have new mortgage data that we're going to talk about in a little bit for why inflation is falling off? Yes, that is, it doesn't really compare to all the implications we're seeing from that perspective. However, it is something to really consider, because if gas is at 80 right now, oil, Brent futures are at 80, that starts going to 85 or 90. We are back at oil prices that we had in September. And in September, CPI was getting hotter, at least the energy index, because oil wasn't coming down. Oil has been down consecutively for the past 2 months, 5% and 6%, the gas index, and the energy index has been down about 2.5% month over month for the past couple months. That is good news. That is why Jerome Powell had no choice but to be way more dovish than he wanted to be, because he just can't hide it anymore if inflation is falling off a cliff. If there is something that is stopping inflation from falling off that cliff, like a supply chain bottleneck globally, like this is $35 billion of cargo in the past week has been halted. If that continues to get, that goes up, that's going to be bad. And as retail investors, we sometimes don't think about the macro, and that's not good. We really need to understand what's going on in the macro just to be able to figure out, how do we position our portfolios or what's going on. I don't think this means, fundamentally change your strategy. It just means be very cautious that if this is happening, it's something to think about going on into the future. So that's what we got going on with oil, and that's hopefully getting you caught up on what's particularly going on in the macro in regards to oil prices. Let's move on to Bitcoin. Because we've got Bitcoin running. We'll talk about Robinhood here as well. Bitcoin, ladies and gentlemen, right now is up about 2%. And it's up about 2%, which is having implications for a lot of other companies, including Robinhood. So maybe we'll do a little bit on Robinhood first, and then we'll get to Bitcoin. It's kind of all intercorrelated together. Intercorrelated, is that a word? I don't know. Well, we made it a word today, because on the market open, we make up words and we make them make sense. Ladies and gentlemen, Robinhood is $13.45 right now. This was a stock that was at $7.95 November 16th. It has gone up a lot. And the reason it has gone up a lot is because Well, the market is, I said this a couple of weeks ago. I said the cat's out of the bag once it hit 10:30, and that's when I really started buying heavily, just because I had finally, you guys know my whole Sherlock Holmes type of story that I've had with Robinhood over the past couple of weeks. It's actually been a really interesting journey, right? Just really digging in and trying to figure out the narrative, the thesis, and then actually making the bet. When it got to 10:40 or 10:30 that day, when it went up from 960, that move from 960 to 10:30, I was like, the cat's out of the bag. Wall Street figured it out. Wall Street absolutely figured it out. This stock has been capitulating at $6 to $8, $7 to $9 for the past 2 years, almost 2 years. It has formed a channel in which the IV was low. And at the end of the day, a lot of people had just left the stock to die, right? People didn't care too much about it, but the product was growing, even if the numbers weren't showing the growth. And as a result of that, Wall Street kind of didn't care about it. Once they reported those crypto numbers in November, where they had 75% month over month increase in terms of crypto activity on the platform, that's when Wall Street realized, wait a second, what's going on? And then you just talk about tailwind after tailwind after tailwind. You've got UK expansion. You've got EU crypto expansion. You've got their ability to innovate in terms of the new features that they brought out onto the platform that has just made the platform more stickier. You've got the fact that their options contracts are now people paying, like I have to pay 3 cents a contract instead of Robinhood eating that cost, which should hopefully increase their gap profitability. This company at an $11.39 billion market cap still has 49% of its market cap in cash. $5.4 billion is still in cash. So you got a market cap that is 50% above cash, which relatively, is not that bad. A couple of weeks ago, it was that their cash was more than their market cap, which was just insane. On top of that, Robinhood bought 55 million shares at about $11 a share. These are the shares that Sam Bankman-Fried bought when he bought 7% of the company back in July of 2022. They bought them back, and a lot of investors were like, why would you spend $605 million on your own shares when you could generate 5.5% of interest from those shares? As of this price right now, if we do some quick math, yesterday they were up 17% on those shares. Currently, they are up 22.27% on that purchase that they made. So, 22% on buying your own stock and not diluting shareholders, because you take 55 million shares off the float, which is really great for shareholders, is probably better than 5% interest rates. Now, why is this happening? The reason why this is happening is because of Bitcoin. Bitcoin right now, 43,904. Oh my gosh. I didn't know it was this high. I thought it was at like 43,400, 43,500. It's making an attempt for 44,000. Now, again, from the correlation from Robinhood, we'll check out the crypto stocks in a second. Look, Bitcoin goes up. There is a company that is out there capitalizing on the retail trading momentum on Bitcoin. Coinbase is one of them. Coinbase is almost, it's 5x from the lows. It was at 6 billion. Now it's at 30 billion in terms of market cap. So shout out to everyone who got Coinbase. I mean, like that was a great buy early in the year. And so, Coinbase is one of the main companies that's benefiting off this. The other company that's benefiting off of this is Robinhood. I mean, think of it right now. Name me an exchange where you can trade crypto in an easy way. It's not Binance. That's not as easy. FTX is gone. And honestly, I can't even think of that many other exchanges. I'm sure there's a lot of them out there. Jupiter, there's a ton of those guys. But in terms of mainstream adoption, your average waitress, where is she going to buy Bitcoin when she thinks Bitcoin's going to the moon and she wants to get some money to Bitcoin? She's not even going to Coinbase, quite frankly, because Coinbase is very complicated. You got to set the wallet, all that shit. It's like, and their fees are annoying. Robinhood charges a 0.35%. They take 35 basis points of every dollar you're putting into the into Bitcoin. Which is the cheapest that exists on the market. And it's a very easy user interface. So Robinhood is correlated to Bitcoin as a result of Bitcoin going higher. And this is not just a theoretical assumption. We saw it in the numbers. October numbers were 92% higher. November numbers were 74% higher. So I don't know what December numbers are going to be like, but right now we got 10 days left of December, and that'll end out Q4. Bitcoin making an attempt at 44,000. If that's the case, Robinhood numbers are going to be higher, and that's why we're seeing the correlation right now with Robinhood in the pre-markets. Coinbase is up another 1.9% after being up another 5% yesterday, $164. Coinbase is at a $38 billion market cap. By the way, Kathy Wood did sell some Robinhood yesterday. She sold about 100,000 shares. I think that was just rebalancing. Some things run up. You got to take a little bit of profits. You got to rebalance here and there. You got, maybe she needs some money to buy some other stuff that she's interested in. So that to me was nothing other than the fact that she just has to, trim a little bit of her position. She bought about 1 million shares a couple weeks ago. So that was one thing that happened yesterday. Another, Clean Spark is up 6% in the pre-markets, $11.10. Riot is up 5.8%. Riot's at $17.69. Marathon is literally running a marathon, up 7.15%. That was another phenomenal joke. Put it in the history books of the market open. That one came right off the top of the dome. $23.52, up 7% on the day. It was up 10.5% yesterday. the crypto stocks are running. And honestly, it's a good trade right now if you're in this. Now, would I buy this right now? It's hard for me to say that because let's say Bitcoin goes back to 37,000, all those stocks take a dump. Robinhood will take a dump as well, but there's a real business behind Robinhood. All the other crypto stocks, including Coinbase, there is no real business other than Bitcoin. Bitcoin is big daddy for those stocks. Like if Bitcoin falls, those stocks are in the gutter. Robinhood, even if it goes back to $8, $9, $10, there's like an underlying fundamental business there that I think is still incredibly valuable. So that is why it's my sort of play on this. But Bitcoin's, up, and because Bitcoin's up, then we are seeing some momentum there. Arnie says Coinbase is complicated and expensive. That is true. I did buy some stuff on Coinbase the other day, and it was just annoying, bro. Like, and I get why it's annoying because you have to set up a wallet and all that stuff. And at the end of the day, it worked and it was easier than anything else. But it was just a little bit more annoying. I mean, if Robinhood had all the coins that I wanted to, just throw some money into and play around with, like, dude, it would just be the easiest thing in the world. Now, one thing to remember, Robinhood Europe has Solana. Solana is a juicy coin. Solana is also, it was at like 17 in the beginning of the year. Now it's at 70. Solana has done very well, but Coinbase is capturing all of that Solana revenue. Robinhood used to have Solana, then they had to delist it because of regulatory concerns. So Robinhood has Doge, Bitcoin, and Ethereum, which are really good. But, if they had the other ones, that would also be beneficial for them as well. Ricardo says, wish I would have listened to On Hood, but I just couldn't get behind the clown CEO or the company. This is a sentiment that I understand. I get why people are upset about this. Unfortunately, I vehemently disagree with this entire thesis that he's a clown CEO or that he's, screwed retail investors. Axios did a report with an interview with Vlad yesterday. And here, let me link it in the chat for anyone that wants to read it. I like how they did this interview. It's just a bunch of questions with bullet point answers. It's not like a real article, which actually is a very interesting way to just consume the information. I actually really enjoyed how Axios did this. But they asked him, what do you do for fun? Okay, so I'm reading from it right here. What's the one thing you do outside of work that helps you perform optimally? And he says, I read math books for fun. Okay, so, on one hand, you guys are telling me, some of you are saying, Robinhood CEO is a clown. This guy is ridiculous, right? He's, what he did at GameStop. And the other thing is wait a second, the guy reads math books for fun. He's trying to do mathematical proofs, which are, incredibly complex. His major is in math, just for fun to see if he can remember his old, college days of his math degree. This is a guy that is incredibly analytical and incredibly creative to be able to get a product like Robinhood out into the world. The big announcement for those that are just joining right now is that a little emotional for me, by the way. Ethereum is up to 5% right now at 22.46 right now. Is Vlad Tenev followed me on Twitter today, and it meant a lot because this is a guy who's his entire company is the reason why I am in the stock market. I think I would have eventually discovered the stock market, but you don't know what it feels like until you buy a stock for the first time. And his platform made it easy for people like me when I was 19 years old, 20 years old to do that. And my family doesn't have financial literacy. And Vlad Tenev is the reason why my kids will have financial literacy and hopefully give it on to their kids. And there will be generational financial literacy in the Kukraja name. Right? That's a big deal in my opinion. And I know you might be like, oh, this guy's being hyperbolic as a stretch. It's it's not that much of a stretch. Who knows if I didn't discover Robinhood in 2019, if, I would have wanted to watch some videos on YouTube about stocks because now I'm into the stock market. These butterfly effects, I know you can take it in a bunch of directions, but it does matter. And so when you say he's a clown, in my opinion, it's just I don't think that person's a clown. And also the GameStop AMC situation that's been talked about 1,000 times, that every brokerage kind of messed up in that scenario. Robinhood was the retail platform. And so obviously retail traders are not going to like it, but that doesn't, that doesn't undermine the underlying business. That doesn't undermine the underlying fact that he has brought this to life and that, Robinhood is a pretty good product that is working right now. And he's a billionaire. That's true because he brought a product to market that's very hard to bring to market. So as a result of that, if you're into Robinhood and if you saw that vision, then there is a little bit of momentum you're seeing right now. Bitcoin, 43,752. Let's look at some other stocks before we talk about Palantir. Right now, Robinhood, 1335. And the other thing, passing 1313 was the key point of resistance. It was up 10% yesterday. I wouldn't be surprised if we see a pullback today because, 13 is a big, big level. Now, granted, I think big money's coming in. I think Wall Street's finally getting excited and they're just like, you know what? If there's going to be a bull market, that bull market's going to be happening on Robinhood. Their average revenue per user is going to go up. Their cost per acquisition is going to start to go down as more people just randomly download the app. In fact, let's do some DD right now. Let's go to the App Store. Let's see where Robinhood is ranking in finance. Probably, 22, 23. Right now they're 20. Look at that. They cracked the top 20. That's happening very naturally. People want to see, people get interested and then this stuff just gets easier. The unit economics get better. They're a tech company. They have fixed costs. That's what they were talking about in the last earnings call. And then things get better. So right now, Robinhood, 1334. If big money comes in, it's going to, do its thing. But there has been a lot of momentum so far over the past week. Duolingo 239 in the pre-markets. S&P 500 actually was down early in the pre-markets, even though some of the other sectors are doing well. S&P right now 473, down about 0.21%. Look, we've had 6 consecutive weeks of just a phenomenal run in the markets. I also wouldn't be surprised to see the S&P take a little bit of a breather. Some of the indices take a little bit of a breather, especially given what's going on with the oil crisis right now, and potential implications on inflation. Again, if we don't get a rate cut in March, we need Jerome Powell to say you're going to get a rate cut eventually in the March FOMC meeting, because everyone's pricing in, multiple rate cuts. So if that inflation problem with the oil crisis in the Red Sea gets, bigger, and we see it in the numbers, we're not getting a cut in March, and people are going to have to reevaluate how much of a cut are we actually going to get. SoFi down about 0.2% in the pre-market. SoFi surged yesterday about 3%, 994 right now. It tested 10, but it couldn't really break through. I think that's, the market makers having their little fun at $10. And I thought that would happen to Robinhood at 13, but there were 75,000 shares. If you look at the book volume on waiting at $13, when I looked at it last night, it was about, it was like a 3:20 or something, 3:20 p.m. And then there was 75,000 shares. Robinhood had to, the bid had to be able to overcome from the ask in order to move on from 13. And once you got to $12.99, Robinhood just punched through, and it went to like 13.10. And there was so much buying pressure, so much momentum coming in that allowed us to get through 13. And so that's what we saw yesterday with Robinhood as well. Okay. This is an interesting comment. Michael says, is he the first billionaire to follow you, Amit? Yeah, I think so. I think Vlad is the first billionaire to follow me. When you put it like that, I didn't even think of it like that. I just thought of I was just so happy. I was just like, oh, this is so awesome, like that he followed me. So yeah, I guess a billionaire follows me, and I'm trying to play my role in trying to support a billionaire building his billion-dollar enterprise. Okay, let's talk about Palantir. So some exciting news happened yesterday that I want to talk about when it comes to Palantir. Now, again, Palantir is not participating in this market rally. I don't think we can complain. Palantir's up triple digits year to date. As a result of that, the market's just like, all right, buddy, you've had your fun. You gained a lot of premium. We talked yesterday that institutional holdings are at an all-time high, literally, as of December 2023. You would know this if you were subscribed to my newsletter, dailypalantir.substack.com. If you're subscribed, you get an email newsletter every morning. We talked about Shyam Sankar's latest interview. No one's even talked about that on YouTube yet, so that's in the newsletter as well. He did one a couple of days ago. I got the link from the unlisted link that was posted on Twitter. So we're seeing momentum with Palantir's institutional ownership, even though it's being sold off because it's at all-time highs at around like 39%. And obviously it's up triple digits, so it's not going to participate that much in the rally. Now, Accenture, one of Palantir's consulting partners, came on CNBC yesterday, and what they said really blew my mind. Okay, the Accenture CEO ended up coming up on CNBC, and her entire argument, because Accenture just had their Q1 earnings, and they said, look, we're seeing a lot of tailwinds in clients asking us for generative AI spend. Listen to what she says in terms of what's going on with generative AI. The reason this is also really, really interesting is because well, I'll pause it when she ends up saying the numbers. But here's the Accenture CEO on what's going on for generative AI as they talk to clients in their consulting firm.
Joining us now is Accenture CEO Julie Sweet as the stock turns around and is now higher. Julie, welcome. Good to talk to you.
Hi, Sarah. Great to talk to you. Thanks for having me.
Yeah, sure. So tell us a little bit about what you're seeing on the demand side and what it says about the appetite for IT spending right now.
Well, there's more of the same in terms of the operating environment. So we're seeing some, pace of the spend has gone down a little bit as compared to the last couple of years, but still very strong fundamentals. So we reconfirm guidance for the year, 2 to 5%. And what's a real standout for our quarter is the momentum in Gen AI. So last year, in the entire year, we had $300 million of Gen AI sales. In a single quarter, Q1, we were at $450 million.
Boom. Boom, 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 boom. Okay, we're gonna let her speak for a little bit there, but I just want to make sure everyone understood that. Last year, Accenture, the consulting firm, not the tech company, the consulting firm, did $330 million of generative AI sales. What does that mean? That essentially means services involving generative AI applications or the consulting around generative AI strategy to clients. So they're not really selling the software. I know Accenture has some levels of software, but they're actually kind of basically being a middleman in terms of either being a system integrator for a lot of these companies, either being like a consultant, literally, in terms of presenting how they should think about generative AI, or in hooking them up with people like Palantir and saying, hey, Palantir is a partner of us. And so they become a sales distribution arm for Palantir. Why don't you use Palantir's generative AI applications and we'll help you, implement it into your enterprise. That's why Accenture is working with Palantir in the UK for the NHS contract, because all these hospitals are going to be using Palantir, and they're going to need a lot of people that just don't work at Palantir, because Palantir doesn't have that many employees to help them implement that at scale. In one quarter, they did $450 million of generative AI sales. All of last year, they did $300 million. Why is this important? Because Accenture is not a tech company. They're a consulting firm. So if a consulting firm is able to put up $450 million of generative AI, essentially consulting, not even selling of the software, right? There's some software there, but not really. What does that mean for Palantir? This is where Dan Ives, I think, is starting to get vindicated on his argument that, look, he's talking to a lot of CIOs and they're saying 8 to 10% of IT budgets, enterprise IT budgets, are going to be spent on Gen AI. And a lot of people are like, all right, yeah, people say they're going to spend it on AI, but we'll see what happens. A consulting firm is able to make almost $500 million in one quarter on generative AI sales. What does that mean for some of the tech companies? So I think, not only are they a Palantir partner, and Palantir is probably getting some distribution from that money, but if they're able to do it, I think companies like Palantir will be able to do it. And that's why it's bullish for Palantir.
So full speed ahead, tech matters, transformation matters. The macro we're all going to navigate for a while, but the fundamentals are very clear. Tech is needed to reinvent industry.
So is the appetite for generative AI outweighing the sort of weakness that you're seeing in the macro environment? And where is that impacting? Is that in the cloud business?
Well, we're seeing strong momentum in cloud, everything from migration to modernization. So moving to the cloud, and then once you're there, using it. Data and AI, so putting in the data foundation that allows you to use AI, but then also in the platform. So really, it's all about building a secure digital core. And that's why you see our security also rising.
So there's 3 things that she said that are really interesting, and then we'll move on from this. You've got cloud when it comes to AI integration. You've got the AI-enabled operationalized workflows for the data that sits in that cloud. And then you've got a secure platform. So you've got cloud, which is Amazon, Google, and Microsoft, right? These guys, we're still in the infancy of cloud. 90% of businesses are still on-prem. They're going to be getting a ton of momentum and growth over the next decade because every business is moving to the cloud. Accenture is a consulting firm that helps do that. Then you've got the actual data applications. These are your foundries. These are your platforms that exist that ontologize the data, make the data useful. This is Databricks. This is Snowflake. This is all these companies that are those second level of abstractions beyond the cloud. The cloud is where all the money is. And then the data applications are where, third order derivative companies can still make a lot of money, even if they're not literally controlling the cloud. Then you've got what she says, the secure platform. I think that is something like a CrowdStrike with cybersecurity. That's also something like a AIP when she's talking about security, confidentiality, making sure there's guardrails, granular access controls. There's so many layers to where these SaaS companies, Zscaler, MongoDB, Snowflake, Palantir, all these guys. And then you got obviously the big ones, Google, Amazon, CrowdStrike, those guys really competing in this sector to be able to benefit from this increasing TAM, which is generative AI. The reason I want to bring this up is because Accenture did $16 billion of revenue this quarter. 450 million of that was generative AI. 450 million out of 16 billion is quite frankly nothing. There is a lot of room to grow. That is my point. And if there's a lot of room to grow, then I think there's going to be a growing TAM, and that growing TAM is hopefully going to encompass companies like Palantir that go after that market. So that's what we got in terms of the update on Palantir. Let's move on back into what we see in the equity markets, and then we'll hear from Michael Saylor before we have the market open. We've got 10 minutes until the market open. Thank you 704 people for being here. Palantir 1787 down 0.5%. Coinbase 163 up 1.46% on the day. Let's see what else we've got going on. Bitcoin 43,718 up 2% on the day. Absolutely incredible price action by Bitcoin. Robinhood chilling down a little bit. 1328. It was at 1350 about 20-30 minutes ago. Right now 1328. If we can just hold these 13 levels, that would mean a lot to me. I mean, going into the end of the year, if we could just hold 13, I think it would be very healthy for Robinhood. It can consolidate there. A lot of people can, start to sort of form their thesis, get excited about it. So if we can get to that level and maintain that level, that would be really, really important for Robinhood. But if Bitcoin rallies to the end of the year, even if it, goes to 43, 44, 45,000 and sustains those levels, that's also really good for Robinhood and a lot of these crypto companies, because at least it's not going back down and, setting itself up to be into a dip scenario, and maybe it does because it's so incredibly volatile. But as of now, it's staying pretty high, and that is great for the crypto companies. That's great for more money that wants to come in and see if they can get in on the action. Google 140 in the pre-markets. I just talked today when I talked about the oil crisis. That was at 5 minutes and 15 seconds for those that are just joining and want to check it out later in the chapters. I used Bard to help me summarize what's going on with the Houthis in the Red Sea, and it was phenomenal. I mean, I said, be comprehensive, give me 5 bullet points, and it gave it in 10 seconds, and it was real updated data. That was my first experience, honestly, using Bard, where I was like, it didn't hallucinate. It gave me the right answers, and it was actually really good. Google is one of those companies. Look, I'm a YouTuber. I'm on YouTube as well. There's no reason I don't have allocation to this stock. This is my only big tech stock. I have 5 shares of Tesla, but you know what I mean? Like real, in terms of real money. And so let's see. I mean, the market's kind of been really upset at Google for a lot of things. They did cheat on their homework with the Gemini video, but maybe we'll see some momentum going higher in the coming weeks. Riot, 4.92%, Marathon up 6.97%, Coinbase up 1.7%, and Robinhood up 0.76%. The other big news from the macro yesterday, and then I want to get into a couple of headlines before we listen to Michael Saylor, is money market funds again saw an $11 billion decrease. That was really important. And then today, little quick macro update as well. So we got money market funds seeing their first decrease in 12 months. Here's the big update today, which again shows that the economy is moving in the right direction when it comes to inflation. And that is mortgage applications. Mortgage applications are coming down, folks. Mortgage applications, this came out this morning. Mortgage applications in the US fell by 1.5%, which is very good. We had 6 weeks of consecutive mortgage applications going higher. That just means more money going to the economy, more people trying to buy houses. You don't want to see that when you're trying to get inflation to come down. So we're seeing that come down, which is really good. That means demand is coming down. You need demand to come down in order for prices to chill. And then we saw the actual mortgage rates come down. What is the number? Mortgage rates are down to 6.83%. It doesn't show it in this, but it was in a different thing that I looked at. Mortgage applications, 30-year mortgage application is at 6.83%. The market was expecting 7.04. It was at like 7.13 last week. So the market was like, all right, it'll go down from 7.13 to 7.04. Came in at 6.83. Why does this matter? A 6.8% mortgage rate is probably not the best for a 30-year mortgage. It's not like, people want to pay that, but it's way better than 8.1% a month ago. And so some people are saying, oh, well, this is not really a win. Dude, we got to be slow and steady. Like this has got to come down. You don't want it to be 5% out of nowhere, right? Like you don't want to see that dramatic stop. You want to see it naturally start to come down and be in line with expectations and eventually hopefully get back to, a standard 4 or 5% maybe in the next year or two. So seeing that come down is even more momentum that we are likely seeing inflation start to fall off a cliff, which is why the Fed has been so dovish. And the Houthi oil crisis is a black swan event that hopefully doesn't accelerate inflation, but as of now, it's starting to come down. We got about 6 minutes until the market open. Let's spend a couple minutes listening to Mr. Michael Saylor. Bitcoin's up 55% in the last 3 months. MicroStrategy is up as well. They're sitting on $2 billion of Bitcoin profits. Here's his thoughts on what's going to happen in 2024.
Chairman and co-founder. Michael, it's great to have you on the show.
Yeah, thanks for having me, Morgan.
I do want to start right there with the regulatory landscape. The fact that Coinbase is now filing a petition in federal appeals court requesting review of the decision by the SEC. Is this the type of situation that could impact Bitcoin or impact the type of work you're doing at MicroStrategy?
No, there's a lot of uncertainty around the rest of the crypto ecosystem, but the one certain element of the ecosystem is Bitcoin is universally acclaimed to be a global commodity or an asset without an issuer. Mm-hmm. So the one thing we can count on is Bitcoin goes forward in the year 2024, and a strategy built around Bitcoin is generally a pretty safe one for institutions.
New rules, speaking of regulations, recently announced by the Financial Accounting Standards Board, the FASB, that are going to require companies to account for cryptocurrencies like Bitcoin at fair value. Set to go into effect, these rules, in the next year or so, but companies can begin to apply them earlier than that. How is that going to affect MicroStrategy?
This is actually really interesting because, again, these regulations means that if you have Bitcoin on your books, you got to count them as like actual assets in your on your earnings and be a little bit more astute about how you count them. And this is what Saylor has to say about that.
We welcome fair value accounting. It's gonna create much more transparency and clarity in P&Ls and balance sheets for any companies that are holding Bitcoin. I think the real significance is that there are companies like Berkshire Hathaway and Apple Computer that have $100 billion plus in cash. And right now they have to invest it in treasuries and sovereign debt. And with this change in fair value accounting, you're going to have a commodity that's valued as fair value, and it becomes a legitimate treasury reserve asset for publicly traded companies.
Yeah,
Now that's a big deal. Apple, Berkshire Hathaway, companies that have hundreds of billions of dollars. Again, they're investing in, foreign debt and these treasury bonds and things of that nature. With fair value accounting, those things are actually recognized on your books in a much more meaningful way. And Michael Saylor's argument is like, you're just not going to be able to get away with those types of returns when you've got something like Bitcoin that is going to be legitimized as an actual asset via fair value accounting on companies' earnings sheets or their earning statements, which is like why you might see, I don't think Tim Cook's going to put it into Bitcoin, but you might see the inclination for companies that have big cash reserves to maybe throw some of that into Bitcoin.
Yeah, and we've had that conversation before on the potential for more adoption, although I suspect Berkshire Hathaway is probably not going to be on that list of companies looking to adopt based on commentary there. I do want to get your thoughts, though, on Bitcoin and the rally we've seen just in the last 2 months or so, since early October, up something like 56%. What do you attribute that rally to?
We're going through a digital transformation of everything. Apple represents a digital transformation of telephones and cameras, and Google's the transformation of books and libraries. Bitcoin represents a digital transformation of capital. 99.9% of the capital in the world is tied up in real estate and stocks and precious metals and bonds. And so we're 0.1% transformed. People, as they get educated on digital assets, are realizing that they ought to be allocating more and more of their capital to this digital asset. And so they're moving from 0.1 to 0.2%. And I think that's really driving the trend. I've said before, if Bitcoin's not going to zero, it's going to 1 million. The real question is it legitimate asset? If it's a legitimate institutional asset, everybody is underallocated to it.
Sorry, I was on mute. That was one of the best mic drop moments I've ever heard in my life. If Bitcoin's not going to zero, it's going to 1 million. Like, think of the balls you have to say that. And he's got some pretty big balls in terms of he's up 2 billion on Bitcoin, right? They own 174,000 Bitcoin. But now, granted, let's analyze the larger story of what he was saying right there. We got 2 minutes into the market open. The story he's making is that Apple represented a digital transformation of our phones and our cameras into something that's digitally native. Google represented a digital transformation into the nature of how we organize the world's information. His argument around crypto, I mean, when you really break it down, and oh, there we go. Bitcoin's at 44,000. Bitcoin is at 44,000, folks, right before the market opens. Let's see if it holds or if it continues to keep going. But his argument there is that if Bitcoin is simply the digital transformation of how we conceptualize the concept of money, it's not the craziest argument in the world that billions of people now use Apple's version of digital transformation, which is the iPhone. Billions of people use Google's digital transformation of what is the encyclopedia when we really think about it. Why wouldn't billions of people use something like Bitcoin, which is the digital transformation of money? Now, there's a long way to go. The money, economic infrastructure, and the powers that control it are very, very complex. But his overall argument is on a long-term perspective. If the dollar is starting to be eroded because of inflation, and Bitcoin is something that necessarily can't be inflated because there's a fixed amount of supply, and it's bankless and there's so much economic freedom that comes with it, then maybe there is more adoption from the 0.1% of people that have adopted it as a legitimate asset, for that to become 1% or 2% over the next couple of years. And if that happens via an ETF, for example, Bitcoin's going to gain some momentum there. And so I think his argument is legitimate. I think it does make sense. The question is now, does the market believe him, and is the market ready to adopt it? And so we will end up seeing what happens. Ladies and gentlemen, we have a market open that we are about to have. Today's going to be a very, very interesting day to see what happens. Coinbase, crypto stocks, Robinhood. We'll see what happens with Palantir. Bitcoin now at 44,000 is going to make it pretty interesting. We got 5 seconds. Thank you all for being here. It means the absolute world to me. Ladies and gentlemen, the stock market, 9:30 a.m. once again, December 20th, 2023 is open. Wake your ass up. Here we go. Bitcoin up 2.92% of the day, 44,000 on Bitcoin. You got Arc Innovation down about 0.3%, $53. You got S&P 500, 473, taking a little bit of a breather, down 0.21%, but nothing too crazy. Enphase was up 10% yesterday. We didn't get to, we saw it up almost 5%, but we didn't get to see it up at 10%. $134 down just a little bit. Enphase also doing absolutely phenomenal. Square, $77, up 4.64% on the day. This is a Bitcoin proxy to an extent. CleanSpark up 7.57%. This is a Bitcoin energy monitor, a Bitcoin proxy. Riot up 5.64%. Another Bitcoin company. Marathon up 9.2%. They were up 10% yesterday. This is $24 a share. This is another Bitcoin proxy. Coinbase $4 away from 170. This company IPO'd at 250. I know a lot of people are underwater, but damn it, you've had some time to DCA at the end of the day. It is a $166. The stock was at $30 back in February because of regulatory concerns, up 3.39% of the day. Robinhood opens the markets at $13.28, up 0.8% of the day, breaking through that $13 level. Robinhood also being a company to think about when it comes to Bitcoin. Bitfarms, $2.96, up 7% on the day. Amazon, 153. Amazon now in the 150s. Google getting some love from the markets before the end of the year. Google has not gotten love over the past 2 weeks, given everything that has happened. Google right now, what do we have? Google at $140 as well. Where's SoFi? SoFi through 10. Did SoFi break 10? SoFi's 994. Okay, SoFi 995. It's trying to break 10. It's really trying to break 10. 996. We'll see if it gets to 10, but it is indeed trying. Bitcoin, story of the day, 44,100. My goodness. $44,100 is Bitcoin right now. What is the reason for this surge in momentum? Honestly, I think if I had to guess, that ETF approval, there's been a lot of rumors over the past couple of days saying that if you just look through some of the websites, there's more updated like applications the SEC is getting. There's like notes they're putting out on the applications. There was some article I was reading that the reason they're sending notes back to the people that are submitting the applications is because, they're revising them and making sure they're getting them ready to publish. That Bitcoin ETF happens, there's going to be a lot of institutional interest that is finally able to allocate parts of their portfolios to Bitcoin. And I think that's what's causing the rise right now in Bitcoin that we're seeing. Where's Robinhood? New 52-week high, as Kelly points out in the chat. Oh no, never mind. Robinhood just dropped down to $13 as soon as we got there. Okay, so there's a little bit sell up there. It still is a 52-week high. It was a 52-week high at 13, whatever it was, 13.30. But we're seeing Robinhood right now at 1304. So there was a little sell-off right there. As soon as the market opened, we're 2 minutes in? Yeah, we got a bit of a sell-off. We went from 1330 right down to 1297. And this is what I was saying in terms of just holding 13. My expectations are very realistic on Robinhood. Even 13 is like incredible. I mean, being above 1250 to me is just insane, given just how fast it's moved. If we can maintain 13 by the end of the day, that would be awesome. I don't know if we're going to do that. So we'll see if that ends up happening. But right now, 1303 is just still amazing to see that momentum come in at 13. There's a lot of people that are ready to sell. A lot of people bought at 8. They're ready to get out of it at 13. It's a great trade for them. I'm not one of those people. I'm going to be holding on to my Robinhood. So we'll see what happens. But as of now, holding 13. Let's check on Affirm. Buy now, pay later. Affirm, $50.74. This stock is up like 100% in the past like month. It was $8 on December 30th, 2022. So it has 6x'd since then. I mean, just absolutely insane. I don't really understand buy now, pay later. I never understood it as a company, never understood Affirm. But if you understood it and you took a bet on Affirm, then there you go. Especially when it was at record lows, maybe it was kind of worth the bet. And that's what we got on Affirm and some of these buy now, pay later companies. PayPal also does buy now, pay later. Let's check on PayPal. Let me know in the chat if you're owning PayPal. Wow, $63 on PayPal. Did not expect that. PayPal's have been having a hell of a run. It was at 57, 55, really all through Thanksgiving. Didn't participate at all in the November, we were up 9%. PayPal was just kind of flat. Right now, doing well at $63. Those Fed interest rate cuts really is what created the catalyst for PayPal to start to do a little bit better. Let's check on Palantir. Good old Palantir. How's Palantir doing? And Palantir sells off, 1756. I thought this was going to happen, down 2%. Look, if it gets to 15, you guys know I'm ready to really buy at 15. I don't know if we get to that level. That's going to be a little tough to see if that happens. I think that's a lot of momentum downwards. Institutional holdings are still at all-time highs. We talked about that on the newsletter yesterday. But in general, look, it's still up a lot. 1757, it's up a lot. 150% year to date. It's going to sell off a little bit. Now, you might be thinking, well, why are all these, look at all this green that Amit's showing you right now with Coinbase, Marathon, Ride. What about Palantir? Palantir doesn't have any Bitcoin on the balance sheets, right? So Palantir, at the end of the day, Palantir, you know what I mean? Palantir has no catalyst. The Titan contract is a catalyst. S&P 500 is a catalyst. That's going to be first half of next year. And then you've got AIP growth, but until it's in the numbers, there's not a catalyst. Bitcoin is a catalyst for these companies. And, a lot of people might be thinking, well, why didn't Palantir buy Bitcoin? But the reason they didn't buy Bitcoin is because Bitcoin's very volatile. And I think at $6-7, if Palantir bought Bitcoin, a lot of shareholders would be like, dude, we don't even know if Bitcoin's a thing. Why are you buying Bitcoin? It would have taken a lot of guts for Palantir, who, by the way, is headed by Peter Thiel. Peter Thiel is a very big, advocate of Bitcoin. For them to buy some Bitcoin, especially when the stock was at all-time lows, I don't think they would have done it, and they didn't do it. But in general, that's why the market's not, necessarily correlating them with some of the rally we're seeing here. Robinhood falling below 12, well, just at 13, 12.99, 13. It's trying to fight at that 13 level. So there's a lot of buyers that are ready to support Robinhood falling down to that 12.97, 12.98. They're like, all right, this is my dip. I'm going to scoop it up down 1.4%. But if it keeps dipping lower, maybe, a lot of people keep selling it off at those prices. Right now, there's not a ton of buying action at 13 exactly to be able to keep getting it above there. But there is, buying action to catch it as it falls below 13 bucks. Google is finally getting some love. That is correct. Big Billy in the chat says my PayPal calls are up 32%. Let me look at my PayPal calls right now. You guys know I've been down on PayPal for a while. My average is like 72. My PayPal calls are up in the past week. Well, they're in the past month, they're up 76%. In the past week, they're down 0.28%. I'm still down $3,800 on PayPal. I was down like 6,000 a couple weeks ago. So we're making progress. We're making progress to get PayPal back to what it needs to be. Bitcoin falling just below 44,000, 43,988. SoFi as well, trying to crack. They're trying to crack that $10 range, $9.98. They were basically flirting with $10 yesterday, and the market makers just didn't let them. The market makers just did not let them get to that level. So, I mean, you know what they need? They need a buyer that did what Robinhood did yesterday. Like Robinhood, when it was stuck at, there we go, SoFi's at 10. When Robinhood was stuck at $12.99, they just bursted through. So SoFi's at 10. We'll see if it can sustain itself because it needs to push. It needs to get to 10.07, 10.06, like really push that $10 level to be sustainable. As you can see, it just keeps flipping between 90 and 99. So it's not as easy to break through. We'll check on it in a second, but it needs some more momentum to really get there, or else it's going to be sold off. MicroStrategy up 3.5%. We talked about yesterday, again, the reason why Michael Saylor is so bullish, as long as the stock of MicroStrategy is above $517, they don't have to pay any of their debt that they collateralize the entire company that's only growing 3% year over year to be able to buy all that Bitcoin, because the debt issuers can convert their debt into MicroStrategy shares if the stock is above 517 by January 2025, which if Bitcoin keeps doing what it does, the stock will be above 517, which means they literally got to buy Bitcoin for free, which is just incredible. And they have to take a massive bet to get there. So, I mean, Michael Saylor will be, it'll be a pretty strong thing if he ends up pulling that off, because it takes a lot of guts to be able to figure out how to do that. Netflix is closing in on 500. Did anyone see Netflix closing in on $500? Goodness gracious. I did not think Netflix was closing in on $500. $495. I guess it rallied yesterday. Paramount Digital 1610. It's up a little bit. Nvidia also trying to close in on $500. Nvidia has gotten a lot of street targets. Nvidia was one of the best stocks to buy for the new year in a bunch of different surveys I saw, just because the PE is lower than every other big tech PE, because these mother effers are growing more than every other company, almost 200% year to date. Absolutely incredible. For some reason, Nikola, the guy, just got 4 years in prison. That's up 5% for some reason. That's just nonsense what's going on. But we are seeing a little bit of momentum in a variety of areas. There you go. SoFi is at 10.04. There you go. SoFi broke $10. SoFi did indeed break $10. There you go, folks. We got SoFi above 10. This has been a long time coming. Now we got to see if we can sustain it. That's the big thing here. Got to see if we can sustain it, because that's the hard part about when it breaks through these levels. But if we can get SoFi above 10, then, I mean, there you go. You've got a real rally in SoFi. I'm just tweeting that out right now. SoFi breaks 10. Let me know in the chat if you have SoFi. Kelly says I was really bearish on Netflix. I was in 2022. I was on the Bill Ackman side of this whole story. Bill Ackman was very bullish on Netflix. I was very bearish. And then when he sold out, I was like, I knew why he sold out. The one thing I got wrong in my thesis when it came to Netflix is a lot of people don't watch user-generated content like YouTube. SoFi, by the way, just massive run, $10.15. It's really sustaining that level. So that's great to see on SoFi. My bearish thesis on Netflix was that, YouTube's better than Netflix. Like there's user-generated content. It's way better. There's an algorithm, like there's discovery, YouTube doesn't have to pay for the content, all that stuff. The problem is there are people that want to watch Stranger Things. I'm not one of those people. I don't give a shit about Stranger Things. The people want to watch Stranger Things. There's only two shows I like on Netflix. One is called Sex Life, which is like a romantic, it's like 40-year-old moms watch that show. I don't know why I got into it, but I like that show. And then You, which is like this guy who's obsessed with this girl, and he like ends up killing her because like she doesn't like respond to his texts. I don't know why I was attracted to that. I don't know. There's just something about it that was really cool. And so I like that show. But those are the only two shows. And so I was like, well, Netflix doesn't have content, so why are people going to pay for it? Turns out the world's pretty big. And Netflix does have a lot of content. And as a result of that, and Netflix is one of the only companies, quite frankly, that has a shit ton of content that's actually worth watching compared to Paramount and the cock of peas, Peacock. Who the hell in the marketing department came up with that name? And, you know, HBO Max. And HBO Max is good, but they're still not as big as Netflix. So Netflix is going to get the investors to invest in their content. SoFi right now at 10.05, up 1.06%. Some of you guys saw SoFi hit 10.30 real quick. I think it maybe flashed it for a second and then it came right back down. But 10.07 right now on SoFi. We're seeing that momentum there on SoFi. We got Sammy in the chat, 2,300 shares of SoFi. We got Austin saying F the shorts. Yeah, that's the other thing I forgot to mention. Thank you for that comment. SoFi is still sold 16% short. 16% short. And so if you got 16% short and SoFi is rallying, that means either the shorts are covering, which might be happening, or there's just way more buying pressure to be able to deal with all the shorts. And as a result of that, you know, the stock's running and there's a lot more momentum there for the company. So we're seeing a lot of price action there when it comes to SoFi. Oh, my Google options are finally green. We're finally in the green on Google. We're finally in the green on Google. I've been down on these options for so long on Google. Google about 140 right now. Goodness gracious. The market finally waking up to Google and realizing that everyone still searches on this damn thing. So there we go. Google is continuing to get some momentum. Yeah, right. Reza, right there when you say it, Google's up 2.4%. Austin, 2,600 shares, bigger than my Palantir position when it comes to SoFi. Incredible. Redford, 7,000 shares of SoFi. Absolutely incredible. Where's the NASDAQ? NASDAQ. Wow. 15,000. Oh my. Remember the top for the NASDAQ, guys, is 16,000. That was November 2021. We had 15,000 on the NASDAQ. Oh boy. Just even seeing that makes me kind of get a little scared. of just like, is this too fast? Are we running really? You know, is it meant to be? Like, are we actually soulmates? Is this really happening right now? We were at 12,543 back on October 26th. Right now we're at 15,000. That's a 3,000 point gain in the NASDAQ in 2 months, less than 2 months. That's a lot. Now, granted, why is this happening? Earnings estimates are up for 2024 because of AI being the tailwind and inflation's coming down. Interest rates are going to get cut. You want to be risk on. So at the end of the day, even if you think we're a little bit overextended, there is a lot of money coming into the market. Those money market funds yesterday going down $11 billion, they're coming into the stock market. And so that is why we're seeing a bit more momentum start to creep in. Let's actually get an update from Yardeni Research. These guys are the most bullish on the street. And then we're going to get a little bit more of a bearish case. So we're going to do bull and bear. Here's the most bullish firm speaking about why the Santa Claus rally is not ending. I think they have like 5,300 as their price target on the S&P. And then we'll hear a more bearish case on what's going on in the stock market. Here we go. This is Yardeni Research.
What are you seeing that maybe some other people aren't seeing? What's the catalyst for this big rise?
Well, I've been seeing a resilient economy really since early last year. Early last year, I agreed with the concerns that we might be in a recession, but I said it was a rolling recession hitting different industries at different times, and I think that's played out pretty well over the past couple of years. I'm seeing rolling recoveries as we go into next year. Housing certainly looks like it's bottomed. We had a very strong number for housing starts yesterday. I think retailing is bottoming. I think that the commercial real estate recession is still ahead of us, but it's probably going to stay fairly well contained, particularly in old office buildings. Consumer is really the key here. The consumer has been remarkably resilient. Been a lot of people saying that they're going to run out of excess savings accumulated during the pandemic, but I'm looking at the labor market and there's still plenty of job openings and wages are actually rising faster than prices. So those are just some of the things that I'm seeing.
Yeah, consumer.
There you go. The consumer strong. I mean, that big word is really important because it's the consumer. And so Yardeni Research does not see the consumer falling off a cliff. They think there's excess numbers of jobs. They think that the consumer is going to be able to get a job if they lose their job. And until that unemployment rate starts to get a bit higher, then it's hard to imagine that the consumer is in a horrible position or in a really tough spot in order to be able to stop this rally. And so for them, they're bullish. Now, are we going to get a pullback? Yes. I mean, we talked about this on Finance Junkies. Eventually, there will be some type of pullback that happens, right? 5%, even 10%, some type of correction. The question is, when does that happen? And, you got to ask yourself, if money's starting to come in, we saw the S&P 500 got $50 billion of inflows, or some ridiculous number last Friday, the largest number of dollars that have flowed into the S&P in the history of the stock market. That happened like last Friday. I mean, like when you see that happening, you're kind of just like, wait a second, like there's money coming in. And what do you need in a stock market in order for it to make sense? You need liquidity. You need liquidity. Liquidity is what gives the foundation for valuations to have the ability to sustain themselves along with earnings growth. So from that perspective, if $50 billion came in, how much room does it really have to fall, even if there is a sell-off there? Granted, there's so much money to support it. Bitcoin still $44,000 on the day. Put in the chat if you own Bitcoin. I don't think we ever asked this question. Put in the chat if you actually own Bitcoin, and then put in the chat if you own any Bitcoin-related companies, and you can name the companies. But put in the chat if you actually do own Bitcoin as well, and how many of you are up on Bitcoin? I mean, are there people here that actually bought Bitcoin? Do we have any like $10,000 Bitcoin people, $5,000, $20,000? Are people like really up on this, or do people have just $30,000 you recently bought in type of stuff? Because I don't have a big Bitcoin allocation, but I want to see are people really holding this one for a long time in the chat? Snapchat 1724, Snapchat continuing to do well. Truist 3663, Tesla 257. There you go. Tesla's continuing to have its momentum. Look, Tesla was stuck at 233 for the past couple of weeks, and now breaking out to 257, starting to normalize at this level, and hopefully making its way to 300 going into 2024. As long as they're able to continue their earnings growth. Now, the last earnings call, not really the best, 9% year-over-year growth. Cybertruck, still far away from hitting the impact of the balance sheet, but at least we're seeing the market not really be that concerned about Twitter and all the other, ancillary concerns that they used to have. Apple 197, closing in on, where's Apple right now? $3.07 trillion. Microsoft 373. Microsoft's all-time high was about 380, so they're a little bit down from there, but they're still doing well. Look at Meta, 351. My goodness, $900 billion market cap on Meta. Oh my God. I remember it was June 2021. I was walking in my local park. And I remember I saw Meta hit $1 trillion. I remember seeing that. I remember seeing Meta hit $1 trillion. I was just like, my goodness, Meta's at $1 trillion. Meta's $100 billion away from being, I think, the $3rd trillion? No, fifth. Yeah, because it's the 6th, because the rest of them are trillions. Tesla's $800 billion. Meta's now more valuable than Tesla. $902 billion. Where's Tesla? What's Tesla's market cap? Tesla's at $820 billion. Wow. Okay, what do we got in the chat? We got Jonas says my Bitcoin position is up to $2,200. That's still amazing, having at least that much allocation of Bitcoin. Peter Girardi says I own 2 Bitcoin and Bitcoin miners. 8 Bitcoin at 680. Really, Douglas? Holy crap! Hold on. So 680. Wait, so 8 Bitcoin times 44,000 means you're basically up like 300 grand, 350 grand. That's incredible. Wow. All right, so there we go. We got an OG there. 8 Bitcoin at $680. Bitcoin, CleanSpark, Bitcoin, EGLD, CleanSpark, Bitfarms. Okay, so a lot of you are into some of these crypto mining plays as well. I'm $1,000 into Bitcoin. Not bad either. 30% of my portfolio is crypto. How isn't Meta valued at $1 trillion? Look, it'll probably get there. Zuckerberg has sold $350 million of shares in the past couple of weeks. That's probably what has created a lot of sell-side pressure. But, of course he's selling, because at the end of the day, he's got to take some profits as as Meta continues to do really well. So yeah, we've got a lot of people still holding on to the Bitcoin. Palantir 1756, PayPal 63. Let's get an update on the bear case for why inflation is going to continue to be rampant. This is Aswath Speaks. Didn't say his name wrong, and that's sad because I'm Indian. I should be able to say his name right. But here's his case for why inflation might still be a little bit of an issue going in 2024. We talked about it today with some of the oil prices, and so maybe it's something we still need to think about a lot more deeply.
No, I give Fed the credit for hanging in there all through the year. But that said, step back and think about what's happened to market set rates. Forget about the Fed funds rate over the course of the year. At the start of the year, the T-bond rate, the 10-year T-bond rate was 3.88%. Today, it's 3.95%. With all of the noise and talk about the Fed through the course of the year, the 10-year bond rate is effectively back to where it was at the start of the year. I think if you look at when the market started to shift, I think it was the start of November when you started to see the mood shift and expectations get reset about what the next year will bring. That to me was the bigger change than the Fed actually coming in and confirming what the market seemed to have already decided just a week ago.
Well, let me dial that back and say, was the expectation change basically inflation's coming down more than we thought? You know, all of these kind of positive developments we were just talking about, that at heart is rooted in what the Fed has done and now it can do in 2024, i.e. ease policy.
The Fed is basically doing what it's supposed to do, which is act as a follower and look like it's leading the market when in fact it's following the market. I think in addition to inflation coming down, the big story of this year was the recession that never happened. The recession that experts told us was absolutely certain to happen. And
he's right about that. That recession that never happened has led to a lot of market momentum, because if it didn't happen, the market's like, all right, well, if it's not happening, it might be going up, so we should start buying it.
I think in a sense, the relief that people have that did not happen was as much a driver of what the market is doing now than anything the Fed might be doing.
Acting like a leader when in fact they're a follower is a very clever way to.
So again, Aswath's point here is that this is a relief rally off the recession that never happened. This is not like a literal sustained rally because of earnings. I think he's correct on that to an extent, but earnings have been good. I mean, like objectively, NVIDIA, Meta, these numbers have been phenomenal. And then inflation's coming down. So I think when you put those two things together, even if you want to call it a relief rally, you know, we're going to see some momentum. Let's listen to a little bit more of him and then we'll move on.
To capture a lot of the dynamic we all watch playing out day to day. Okay, so then talk to us, Aswath, as you know better than anyone, valuations, you know, the market at these levels, expectations for 2024. What are we now looking at?
The scary thing for me in markets going into the next year is now good news has to actually be good news. Last year, if inflation came in at 4%, that was good news. This year, if inflation comes in at 3% plus, that's going to be bad news. Last year, the economy not going into a deep recession was good news. This year, the economy slowing down will be bad news. So in a sense, markets have to be fighting that expectations game much more strongly this year, which means that, you know, we're going to be watching earnings numbers again far more than we did last year, because that's going to be an indicator, is the economy staying strong?
Although, if I recall, your basic sense from looking at, you know, looking through things is that you think the S&P can return another 8 or 9% this year.
I think so. I mean, I think, you know, that would be my expectation going into.
I did not know that. I did not know he thought the S&P can still return. I thought he was a bit more bearish. So he's actually kind of bullish, even though he's saying some of these valuation expectations are getting up there.
The year 8 to 9%, but now I had 8 to 9% expectations coming into this year, and it's 22%, and 8 to 9% the year before, and it was minus 20%.
Are you just writing the same number year after year?
It's going to be pretty close. Your expectations numbers should not change that much, because if it did, we wouldn't be where we are in the market. If people expected the market to be up 20%, it'd be up today. So the reality is the expectations for the market should not be a wildly variable number. So when I see market strategists swing all over the place, my reaction is, you guys are making up stuff. I mean, and you know, the truth is markets, the expectations are pretty stable. What the market actually delivers is going to be all over the place.
So that is, you know, I think he's really correct on that. The market ultimately is it's a perceptual understanding of what's going on in the world, and the expectation for it, which was the expectation this year, was we were, you know, headed into a massive catastrophic recession. That did not happen. And as a result of that, a lot of people had to kind of change their float in terms of how they thought about what's going on with the market. We're going to hear from Cantor Fitzgerald in a little bit. We'll do some headlines, go back into some of the equity markets, and then we will talk about another person who's been bearish all year and continuing his bearish sentiment. He didn't really have the best arguments to be bearish yesterday. It was kind of awkward watching him be bearish on CNBC, because he's been bearish all year. You guys have seen him on my channel before. And yesterday he just sounded kind of deflated. He didn't really sound like a real bear, you know, but he kept being a bear. And I was just like, I don't know. It just sounds kind of weird. QQQ at 409, Netflix 497, NASDAQ still above 15,000. SoFi falls below 10. So hit 10, not enough momentum to sustain above 10. That's normal. I thought that would happen. 991, that's still amazing, right? Even though it's not above $10, it went from 8 to 990 the past couple of days. Still really amazing. Bitcoin falling just below that 44,000 level. Where's Robinhood? Are we maintaining 13 on the hood? Are we maintaining it? I don't think so. I think we're at 1295 or something like that. Robinhood 13. Wow. Oh my goodness. Robinhood's really doing some amazing, for the fact that there are so many buyers there right at that 1299 level to be able to continue to give Robinhood momentum. That is absolutely incredible. So Robinhood continuing to do well even though, it's fighting for 13, which is a hell of a fight. It's not easy to keep that level sustained given the run that they've already had. Square at 78 up 1% of the day, Google 141, CleanSpark up 5%, Riot up 4%, Marathon up 6%, Coinbase up 3.5%, 166 on Coinbase. Absolutely incredible price action we're seeing right now in a lot of these equities. Palantir right now at 1761. I just got an email in real time on Daily Palantir. So I write a newsletter, dailypalantir.com/subscribe. I just got an email. I'm going to read it to you guys right now because I'm seeing this email and I want to respond to it live. And I think you guys will have a response as well. So this person says, "Hi, Amit. Palantir recent stock performance was very, very, very bad." They actually put 3 varies. "Everybody is so disappointed except Mr. Karp sold at a very good point, hoping something happened to change that. Have a nice day." I understand the sentiment that you feel, Mr. Person who might be watching this right now that sent this email. The problem is, I don't think that's the right sentiment to have. At 2185, it was very obvious the company was overvalued in terms of just the extension, given the growth rate, like the market got ahead of itself. This is where you need to actually understand the company. If you're just a passive investor in Palantir, then you shouldn't care if it goes from 21 to 17. Like, why are you upset? Like, that's a normal price action. Or 17 to 18, 18 to 22. Like, it all, like, if you're a passive investor, it doesn't matter. If you're an actual engaged investor, it doesn't mean you just know about the qualitative understandings of Palantir. You have to understand the numbers. And quite frankly, a $50 billion market cap for a company that's barely profitable because of their net interest income, that's not worth $50 billion. Like, with a growth rate of under 20%. But the market got ahead of itself. That's okay. Insiders are going to take profits when that happens. Look at the Nvidia CEO taking profits, Meta taking profits. People take their profits. So I think Karp selling at 2185 was a good sell, or 2150, whatever he sold at. It was a good sell. It was a sell that he needed to do because it would be kind of stupid to not have that sell. If he didn't sell, other people would have taken profits. And at the end of the day, that's kind of what we see when we have a type of sell-off like that. So although I understand price action is annoying and it's not participating in the rally, it's still up a lot this year. And it's something to remember as a retail investor that valuation can get ahead of itself, and it's normal for this to come down. I would rather Palantir not be $27 right now and have a ridiculous valuation, a meme stock valuation that makes no sense. I'd rather it capitulate in the $17 range, maybe come back to 15, 16. That's normal price action. That's healthy price action. And then when they really show the growth, the market's really going to reward them because the market has been known to give a premium to companies that are able to actually grow. So I think that that actually makes sense for them as well. Austin says, "Amit, I'm 23 and I have 25,000 in debt. Do I pay it off in 2 years and start heavily investing then? Or do I just do monthly minimum and invest some every month now?" This is a really good question. I know a lot of people struggle with this. Look, I'll give you my scenario. I have $10,000 in student loans. I am passively paying that off every month. And I'm investing as well. Some people say pay off all your debt and then get into investing. I think that's kind of ridiculous. I mean, like, obviously you should be investing a reasonable amount, not enough where you can't pay back a simple, payment on your loans, as long as that interest rate is reasonable that you have. And I think you do both at the same time. I don't think you have to completely exclude yourself from any level of financial independence by playing in the markets because you have loans, as long as you're not putting so much in the markets that you're worried about missing a monthly payment. Like, I would take a year's worth of monthly payments, allocate it on the side, just so you have that done, and the rest of it, there's no reason I don't think you can participate in the markets as well. Now, some people, the Dave Ramseys of the world, they're like, get rid of all your debt right now. I don't think that makes any sense. Like, I have $3,000 left on my car. I don't think it makes sense to take my $3,000 and dump it into that car payment when I can pay $300 a month and take that extra $2,700 and do something with it. Right. So to me, I actually think that it's better to kind of do it in both ways at the end of the day. Ardrick says, compared with the overall market, Palantir, $17 for Palantir is a low valuation. Yes, if we're talking some of these SaaS companies like Snowflake and Datadog and all these companies that are getting a lot of momentum, the only difference is a lot of those companies are growing a lot more. That is the only pushback I have. And if a lot of those companies are growing a lot more, then you can, with the PE ratios, prices, all that starts to make more sense in terms of the valuation. Palantir. But in Q4, if that growth comes back 20, 30%, 22%, 19, 18%, it's going to be exciting for Palantir. And so we're going to get the momentum. Kelly says, "Is that why we're breaking up? Because I told you because I said I'd pay for my new car in cash." No, Kelly, I actually think that's a baller thing to do. Dude, if you can pay off like a $70,000 in cash, that's not a bad idea, in my opinion. If you actually can take $70,000 just because you have so much money that you don't need to worry about trying to allocate, that $70,000 into the markets because you have other money to allocate and you just don't want the debt and you don't want the mental fear. I think that's totally fine. It's not a bad thing to do. But most people can't do that, right? Most people, they are stuck in terms of not being able to pay something off in cash. And so I think it's totally fine to have some debt and try to make your money work for you in other places as well. Mario says Kelly's flexing on us. That was absolutely a flex. Like, she tried to play it off like it wasn't a flex. That was 1000% a flex. Oh, because I can pay off my car in cash? That was ridiculous. That was a crazy flex. All right, Eric Johnston, the bear who's been bearish all year, he's going to have to get up and justify why he is still bearish. Let's hear what he has to say.
Except for a brief moment in tactical time.
It's been a year of multiple re-rating. So if you look at earnings since the beginning of the year, earnings were actually unchanged versus last year. So the growth for the earnings were about 0 year over year. The 10-year yield was higher on the year. Commodities were lower, but stocks re-rated. They're now trading at a 21.5 times multiple on earnings. Our view is that we thought if everything went great, they would trade at about a 19 multiple. As crazy as that sounds, right? 19 multiple, which would have been about 4,300 in the S&P. We were at 4,100 7 weeks ago, as you know. We're now at much higher, and we're at 21.5 times earnings. So we didn't expect the multiple re-rating to 21.5 times. We do not think this is sustainable, but we also think that you do have to be tactical from here, because what we heard from the FOMC was a positive. It was a positive for
the pivot.
The pivot. So you have a Fed that is saying we are not going to hit our inflation target until 2026, yet we're going to cut rates 3 times in 2024.
Now, see, this is where I think this guy is making a mistake. The Fed has said, like look at this guy's bear thesis. He's like, oh, the Fed said they're not going to hit 2% inflation by 2026, but they're cutting interest rates 3 times next year. The Fed has said inflation was transitory. Like, the Fed says a ton of shit, right? So what if we hit 2% inflation next year? What if we hit 2.3? What if we hit 2.6 and then we get to 2% in 2025 and it's not 2020? This is the problem. The market believes inflation is coming down, and the Fed with the 3 rate cuts basically told the market, we're on your side. We believe inflation is coming down. This guy thinks that no, the Fed still thinks inflation is going to be at 2% by 2026. What if things change? And if things change, his entire thesis kind of falls apart. But I guess the inflation data they're looking at, which is the same data we're all looking at, is showing inflation is going to be stickier. I don't think that's necessarily the case.
That's very equities friendly. Very equities friendly. Okay. And with that, financial conditions have loosened and net worth for consumers has risen. So those things are a helpful backdrop for equities. And so you have to be, I think, tactical from here in the short term until that is proven different, which we think it will be. And we think at that point, you could see a sustained down move.
What do you think that you and other, whether it's strategists, market observers who have looked at this market throughout the year got most wrong? Is it the fact that the economy remained a lot more resilient than you expected, that the amount of Fed tightening that we had, which was historic, and in the reasonably short period of time in which we had it, did not have nearly the dramatic impact as you expected it would?
So I think it was the economy. So if you think about what has happened, the Fed went from 0 to 5%, right? And we were at this full employment situation. And yet here we are today, third quarter GDP was 4%, right? This quarter is looking like it's going to be 2%. And the labor market, although it's slowing.
Well, Atlanta GDP just raised theirs to like 2.7.
2.7%.
All right, so that's not 2%. That's closer to 3 than 2.
Yep, that's fair.
Be fair.
Yep, 2.7%. And so right now, the economy, and for this full year, has been far more resilient. Now, it has not translated into earnings, right? Ultimately, stock prices are based on a multiple on earnings. And earnings the growth rate was 0 year over year. And our view on that was correct. Our view on the economy, so far, it has been far more resilient than we expected. We think risks for the economy remain very high.
Why? Given the pivot that you cited at the beginning.
Sure. So the unemployment rate is 3.7%. There have not been any bull markets that have started from a 3.7% unemployment rate. They've typically ended with a 3.7% unemployment rate, right? The unemployment rate coming out of COVID, 14%. Out of the financial crisis, 10%. Out of the 2003, 7%. 1992 is 7%. 1982 is 10%, right? Bull markets start with high unemployment rates. And then the reason why you have the bull market is because labor is added throughout that time, and you have this great run of the unemployment rate coming down year after year after year.
Yeah, but you're citing periods of
Okay, so that's the end of the clip. Look, it's an interesting argument, right? It's an interesting argument. His argument is that the bull market happens when you have all this labor added to the market. So you got to kind of start at a low point with unemployment being high, and then work your way through, and then add all that stimulus to the economy. I think there's a couple of points that he's missing. Not once did I hear the two magic letters in his talk, which is A and I. And look, he's a macroeconomist, but a macroeconomist has to understand what A and I means. A and I means more efficiency, more jobs, a lot of revenue and multiple expansion, because companies are simply becoming better. We have 8.8 million job openings right now. We had 9.8 million a couple months ago. So yeah, did we increase by a million jobs? Correct. If we don't see unemployment hit 5, 6, 7%, even if it goes up to like 4.1, 4.2, which is what the Fed thinks, I don't think that means we need to have a start of a bear market for things to fall all the way down if you have less jobs, but more efficiency and more revenue per capita, because those companies are starting to do better. On top of that, this is a unique scenario. This idea of a soft landing, as crazy as it is, because it goes against 1982 and 2008 and 2020, it goes against all of the different times we had economic turmoil. This one's different to me. And I know those are the famous last words. This one's different. But the reason I think this one's somewhat different is because this is getting rid of $7 trillion that was printed from a global pandemic. This is not subprime mortgages that were given to nurses, right? And that couldn't afford those mortgages, or to strippers as per The Big Short, right? Like, so it's a different, it wasn't anything malicious in this case. It was the Fed tightening interest rates the fastest we've ever seen in 12 months, because we had inflation go out of control, because we printed $7 trillion to give people some money when they lost their job because we had a global pandemic. I don't think this was necessarily the same type of malicious bad intent for why we've had a recession like other times. This was an anomaly, and maybe the soft landing is also the anomaly as well. So that's what we've got going on right now in the macro. A couple of headlines. Let's get back into equities real quick, and then we'll get into a couple of different headlines we've got going on. For those that are just joining, I talked about oil at the 5-minute mark. If you want to go back in the chapters and watch it, talked about it for about 10, 15 minutes. It is an issue. Oil prices right now, Brent oil at $80 a barrel, up 6% in the past week. The Houthis, Red Sea stuff. So a lot of stuff going on right there can have implications on global supply chains, because it creates supply chain bottlenecks, which then can have implications on inflation. So something to take into account. 44,000 on Bitcoin. So we're still at that 44,000 level. Enphase barely touched for the day, 135. Enphase retaining that 135 level. Absolutely incredible. Now, the thing about Enphase that's important to understand, they lowered their guidance by 10% a couple weeks ago. I didn't even notice that. So they said they were going to guide for like $350 million. Now they're going to do less for that in the Q4 earnings, and they cut off about 10% of their workforce. Enphase is running a lot, but nothing has changed about the story of Enphase. The only thing that has changed is interest rates. Like, Enphase's numbers are still going to be trash next quarter, and they're like making that very clear to the market. So Enphase just got ridiculously oversold, but one could argue that if the business hasn't changed, because interest rates haven't get cut yet, and so residential solar is not, flying off the roof like it was a couple years ago yet, the market's front running it, but the market also needs to take into account that it's not there yet. And until it's there, you're not really going to see the earnings impact for Enphase. Google, baby, up 3%. Market is finally excited for Google. 142. We finally got the market to get excited for Google. And we got some momentum on Google. Coinbase up 3.8%, still 167. Bitfarms 296. Amazon 154. CleanSpark up 8% on the day. Those $10 calls. Congrats to those that had it. Goodness, absolutely incredible. Riot 1764 up 5.85%. Snowflake 199. Disney up 1% up 0.12% at 94. And then Google we got at 142. Let's check on Robinhood. Where's Robinhood at? How's the hood doing? 1301. I gotta give it up to Vlad. I gotta give it up to Vlad right now. I mean, this is incredible. Maintaining 13 is not an easy thing to do. Absolutely incredible for Robinhood. They're maintaining 13. That's hard. That's really hard. Robinhood right now at $13. SoFi $9.85, falling back from $10. QQQ again, another all-time high, $409 on the QQQ. Absolutely incredible. S&P turns green. S&P turns green, even if it's barely. 474.98. Could you imagine we hit 478 before the end of the year? That's the all-time high. If we actually get there and Tom Lee's right, oh man, it would be so nice. It would be so nice. Zim is having a short squeeze. I remember this stock. I bought this stock a while ago. Oh my God, Zim. Wait, is this the same stock? Hold on. Oh, no. This is not the stock I bought, but this is a stock we used to talk about a while ago. They're a shipping company. Yeah, I forgot about these guys. these guys are no wonder they're up 8%. They're shipping ships, all the stuff that's going on right now with oil. There you go. There you go. So Zim's having some momentum there, and there's probably a little bit of a short squeeze. This is a small cap, so we know small caps are going up. Let's check on IWM, $1 billion market cap. They're up 8%. IWM, $201. They're up 0.41%. So small caps continuing to maintain their momentum as well. Apple at 197, SLG 46, Open Door up 2% at 440. Where's the Lululemons? 507 on Lulu. I'm never buying their lemons, but a lot of people are. $135 lemons for men's leggings or, sweaters, whatever. Lululemon, 507. NVIDIA, 497, trying to break through that 500 level. Microsoft, 374. Meta, 353. MicroStrategy, 595. And where's Palantir? Palantir, 1774, down about 1.7%. All right, some quick headlines on the day. So number one, we got orders for Taiwanese exports of goods are up 1% year over year to $50 billion as of November 2023, rebounding from October's 4% drop. This is interesting because Taiwan is becoming more of a global player in the supply chain. Obviously, they've been they've been a really big deal for a long time because of obviously Taiwan semiconductor, like shipping out the chips that we need for NVIDIA and all these other companies to actually be able to create these GPUs. So we're seeing some more exports happen from Taiwan. Also very good that Taiwan exports are increasing to the United States because we want Taiwan to be integrated in the global economy. The more they're integrated, the harder it is maybe for China to do something to them, because we know that, hey, if they get fucked, everyone gets fucked. China, you get fucked as well. So you don't really need to do this. So hopefully that's going to be a good thing. This was the first rise since August of 2022. It was lifted by a recovering demand for electronic products, up 3.5% versus negative 0.27% in October. Again, the consumer buying these iPads and these laptops and these TVs. There's momentum. There's momentum from the consumer, which is helping Taiwanese exports. Another thing is oil, obviously rising to 2-week highs. We talked about that. UK inflation rate came in below forecast. So annual inflation for the United Kingdom slowed to 3.9%. This came out this morning in November of 2023. Canada was up a little bit. So Canada's basically CPI was hotter than expected. The UK came down below forecast of 4.4%. Which is really good news for the global equity markets. You got, United Kingdom, a very, very big country in regards to the global economy. Inflation coming in at 3.9%. Our inflation in the United States is at 3.1%, and we came down from 3.2 last month. They were at 4.4. This is kind of a major sharp decline for them. If they can continue that, again, the global story comes from the fact that inflation is starting to fall off a cliff. The largest downward contribution came from transport, which was negative 1.5% versus a market expectations of positive 0.5%. For us, it was energy, right, coming in lower. Then we had motor fuel costs, secondhand cars, so kind of the used cars, maintenance, repairs, and airfares ultimately created a lot of pressure going downward. Other downward pressure for the UK was prices for recreation and culture, which came in at 5.3% month over month versus 6.4%. That allowed more downside pressure on inflation. And then food and non-alcoholic beverages came in at 9.1% versus 10%. So we're seeing more downside momentum when it comes down to inflation, which is a really, really good thing. Amit, are you bullish on genomics? Yes, but I have no idea what company is going to win the genomic space. ArcG is probably the best bet if you have a long-term mentality on genomics. Just let Kathy handle that. She's the only fund manager that I think really cares about genomics at scale. But I don't have any allocation to genomics right now. ARM, let's look at that. We got that in that. Wow, ARM's at $71. Oh my. That is, I thought some people were paying an arm and a leg to buy ARM at that IPO price of what, 61? But they're up $71 on ARM. Not bad at all. We got ARM continuing to go higher. Let's check on Instacart. We haven't checked Instacart in a while. Instacart. My mom uses Instacart a lot now recently. We got a subscription. Instacart's at 24. It IPO'd at 31. Yeah, Instacart, that one was a little obvious. This is a little bit of a Instacart's going to be a little bit of a tough one to keep doing what they got to do. $6.8 billion market cap. They're not getting any love from the small cap names because I think people just don't really believe in the business that much yet. They've got to show some more growth. ARM, though, I mean, look, if Taiwanese exports are up, that's also a good thing for ARM because they're part of the entire global supply chain when it comes to chips and manufacturing. ARC Innovation 5333. Bitcoin, look at that, 44,300. Oh my God. That's like real momentum on Bitcoin right now, up 3.45%. Oh my goodness. That is momentum. That is momentum we're seeing on Bitcoin. Wow. Wow, wow, wow. That is some real momentum. Let's see if it can sustain that. If it can sustain that, we're going to see some, but let's go to the Bitcoin stocks. How are the Bitcoin stocks doing? Clean Spark's up 9%, Riot's up 6%, Marathon's up 7%, Coinbase up 4%, 168. Let me do some year to dates on these. Let me go on Robinhood real quick and just check some of these out. Okay, so let's do Clean Spark. Year to date, Clean Spark is up 443%. Okay, let's do Marathon. Marathon year to date is up 559%. Okay, let's do Riot. Riot year to date is up 406%. Okay, let's do Coinbase. Coinbase year to date is up 359%. Let's do HUD 8 mining. I forgot to talk about that one. HUD mining's up 7%. Oh my God. This is wow. Does anyone in this play? HUD 8 Corporation is up 1,400% year to date. Does anyone know about this guy? Like, are you guys? That's a lot. It was at $1 in 2023. It's at $13. That's a lot. Wow, that is a lot for a HUD 8 mining. So shit, that just shocked me. I did not expect to see up 1,000%. Now, granted, when you see these numbers, I think there's a lot of FOMO that happens. I'm not in any of these plays. Okay, I'm not in any of these plays. So I'm not FOMOing into any of these. I wasn't Bitfarms. I could have been up like 400%, but I sold my calls a little early. I'm not playing this because I don't understand this industry. I barely understand Bitcoin. You guys have seen my evolution. Now I'm starting to understand it a lot more. Bitcoin now 44,178. So I don't think I can do a crypto mining bet without really understanding Bitcoin because the volatility will get to me. I won't be able to stomach it. I can stomach the volatility on something like a Robinhood because I understand the business. And I've kind of made a deal with myself, which is if I don't understand it, I'm not going to buy it. Like I just don't want to deal with the mental pressure just for the sake of money. Kelly says, you're not going to believe me, but I have HUT. Interesting. It's a Canadian company. So the next question, Kelly, is what's your average on that bad boy? Because over the past 5 years, it definitely was, well, in 2021, if you bought it, you might be breaking even now. But if you bought it any time after 2021, you're probably up. You're probably up on that one. HUT had a 5-to-1 split. Oh shit, I didn't even know that. I did not know that. Well, it's up. It's up 1,000% this year. If you bought some of it. Let's see what else we got. TLRY is up 10%. Yeah, we got another one there. So we're seeing some momentum there. Tilray Brands, that's up. That's a small cap at 1.62 billion. Robinhood 1301, still maintaining that. Tesla breaking 258. QQQ 409. Where's SPY? Is SPY green still? Is SPY still green? Wow, SPY 475. We're green. Market's buying, guys. The market's buying. People are, I mean, like we've been waiting for a sell-off for a while. The market is continuing to buy. Google 142. I mean, goodness. This is just incredible. Absolutely incredible momentum. Not bad, folks. Not bad at all. All right, where's Palantir? Palantir 1774 down about 1.17% on the day. All right, so I think that's it for me. We'll do word of the day, and then we'll get you guys out of here. But we've got a green market continuing to be green. It's December 20th. We got Christmas in 5 days, dude. We've got Christmas in 5 days. We got my mom's birthday in 2 days. That's crazy, bro. Isn't it crazy? It's December 20th. Kelly says my average is 14. Damn. That's wild, bro. She's like, I'm like, oh, this stock's up 1,000%. She's like, oh, I have that stock. Everyone's like, damn, Kelly's smart. But my average is still above the average, even though the stock is up fucking 1,000%. That's crazy. That just goes to show you how some of these rallies can get ahead of themselves. And it's tough. All of us have been in that situation, dude. Like I was breaking even at $15 on Palantir. Some of you mother effers that have been watching my content since 7 were up almost, 200% when the bad boy was at, or 150%, whatever, when it was at 15. And I was breaking even. So, it was tough. One time a fund manager, we got on a Zoom call. He manages like 40 million bucks in Texas. And he just wanted to talk to me about Palantir. And I was like, so how much you got? And he was like, I got a lot. And then I was like, how much? And he was like, I got like 370,000 shares. I was like, damn, what's your average? He was like, $7. And I was like, oh my God. And I was like, so how'd you have the conviction? He was like, honestly, your videos helped a lot. I was watching a lot. And it's like, damn it, bro. I'm happy for you, but I don't even have that good of an average. And I was the one making the fucking videos. So I didn't have the cash to deploy. I bought at $30. So I was averaging down because at $30, when I didn't know what a market cap was and Palantir was almost $100 billion market cap, I was like, I was only at $30. That's like the cost of like a Chick-fil-A at right, $30, not too bad, you know. Cost of a good date. A good date should cost you about $30, right? Take girl out take girl out for a good date. $30. I'm like, shit, it's a cost of a date. That's totally fine. That was not fine. It was too much. It was the market cap was too much. So yeah, we are seeing a little bit of Christmas momentum here. Solana's flying, dude. What's Solana at? Let me see Solana real quick. Then we'll do word of the day. I forgot to do word of the day. Solana right now is at $80. Wow. Wowzers. Solana's another one I'm bullish on. I own a little bit of it, but Solana's one of my friends who's deep into Solana. He's been telling me all about it, and I was like, yeah, you're probably right. This thing's not a joke. It can probably it's about the developer ecosystem that loves using Solana more than a lot of other stuff. Oh, this is a good word of the day. This is a good one. I like this one. Let's do this one. This is a good one. I'm not going to pronounce this incorrectly. The word of the day, folks, is jollify. Jollify. To make or become jolly or merry. Jerome Powell has absolutely jollified U.S. stock market equity investors and global investors that invest in the U.S. stock market because people are feeling pretty jolly given what he said about interest rates. The comedian's hilarious performance jollified the audience, filling the room with laughter and joy. I wonder if they're talking about me. I wonder if that sentence about the comedian's hilarious performance is about me. Maybe this dictionary.com watches the market open. Whoever typed that up for making the examples, maybe they're a fan. The cheerful decorations and lively music jollify the atmosphere at the holiday party. Are you guys going to any holiday parties? Are you guys doing any of that? I will be live on Christmas Eve for like 5 hours or something. We'll have a holly jolly amidst Christmas Eve party on the channel. We're having a party for my mom on Friday. So we're doing a little get together and it'll be fun. And so we're doing that. But traditionally, I don't really go to Christmas parties or holiday parties. I don't really do that. So I'll be alone for Christmas, but we'll have a little birthday celebration there. Let me look at some of these comments and then we'll get out of here. Where is this? Okay. I averaged down from 22 to 12 on Palantir. Yeah, it was tough. We bought high. And when you buy high, it goes down. Home Alone special, dude. I haven't watched Home Alone in so long, but I feel like I know that movie so well because I've watched so many times. Maybe we can't watch it live on YouTube. I wish we could, but like they're gonna ban us unless we watch. If YouTube has, remember those free movies? If we watch a YouTube free movie live on a stream, I wonder if they would nuke it still. But we'll see what happens. Adam says, if you believe me, I got 2,500 shares, 100% from premium. I got selling options, 100% free. Absolutely incredible. We're going to get Adam on eventually either this week or next week on the Market Open. We're going to talk a little bit about options and some of the strategies he's been doing, maybe even, a lot more in 2024. We'll collaborate on this channel. Cause he's just making a killing on options and learning a lot about this shit. So absolutely incredible. I think that is it for us guys on the Market Open. We'll be back. I couldn't upload the Daily Palantir episode yesterday because my computer, it was bugging, bro. It was just taking forever to export. This is why I need to get a new computer. So you guys will get 2 today. You'll get one in like an hour. It'll be uploaded. And then you'll get another one at like 7 p.m. So you're going to get 2 Daily Palantir episodes today. I did a reaction to ticker symbol use video, so you'll be able to check that one out. DJ said, since my birthday is on the 22nd too, can I celebrate with mom? Absolutely. Come through, DJ. I'm happy you are sharing the same birthday. And we'll be back tomorrow, 8:45. We'll be here fine and chunkies 9 p.m. And we'll keep going from there. Invite loads of guests on Amit. Benny, that is a strategy for 2024. We are going to have a ton of what we're going to call Market Open or Amit channel contributors on the channel, just like CNBC has their contributors. I've been talking to a bunch of people over the past couple of days and been like, let's get you on the channel a lot more. So we'll have a lot more guests this year or next year. And we'll keep going from there. Dude, this ridiculous narrative. So for those that joined late, that was the big announcement of the day. Vlad Tenev, the CEO and founder of Robinhood, did follow me this morning. And now Kelly thinks I'm forgetting about her because Vlad followed me. Let me just make it very clear. The person I need to make sure follows me forever is Kelly. Okay, more than Vlad. Like if you gave me a choice between Kelly and Vlad following me, I would have to think for a second, but after I think for that 1 second, just 1 second, not 5 seconds, just 1 second, I would think, I'd be like, I'd rather have Kelly follow me than Vlad. Okay. So let's just make that very clear and put it out there. And again, Bay Ray, final thing for the Market Open today, in case you missed it, I did go to the gym this morning. That screenshot is from 4:30 a.m. I was in the gym by 6:30. And I worked out, just letting you guys know that I did go to the gym this morning. And if I go to the gym tomorrow morning, I will say again that I went to the gym in the morning. All right. That's it. Have a great day. Wednesday. Let's kill it. I'll see you guys tomorrow, 8:45 a.m. And let's see how this market continues to do. Bye, everybody. Thank you for being here. Good night. That was stupid because it's morning, but you get my point. Bye. Thank you.